We are covering these 3 top stocks with 100% plus gains today. Our review on NAOV. NanoVibronix Incorporated is a medical device company catching attention with its innovative use of low-intensity surface acoustic wave (SAW) technology. The company's product lineup includes UroShield, Pain Shield, and Wound Shield, portable, at-home ultrasonic therapeutic devices. UroShield is designed to prevent bacterial biofilm formation on catheters, which is a significant concern for patients using long-term catheters. Pain Shield provides ultrasound therapy for both chronic and acute pain, offering a non-invasive, drug-free alternative for pain management. Wound Shield focuses on wound healing using the same low-intensity ultrasound technology, giving patients another tool for at-home care. Today, NanoVibronix's stock saw a remarkable 144% jump, with 91 million shares traded. The stock initially surged by 145% in pre-market trading before a brief trading halt, then another 75% breakout at market open. The stock hit an intraday high of $16.25 but then began to fade off as the day progressed, with the momentum cooling down during regular trading hours. After-hours trading saw continued fluctuation, with the stock pulling back from the highs it reached earlier in the day. The massive volume and volatility signals strong investor reaction, but also a market that is trying to process what might be behind the rapid rise in price. For investors, the sharp rise in stock price is certainly impressive, but it comes with the usual volatility associated with small-cap stocks. NanoVibronix, while offering innovative products, has a market cap that makes it highly susceptible to large price movements. The fade-off from the intraday high suggests that investors were likely quick to lock in profits after such a huge run-up, which is typical after significant surges like this. The volatility today, coupled with the fade in after-hours trading, indicates that the excitement might be short-lived unless there's further news or confirmation of a solid catalyst behind the move. NanoVibronix is operating in a promising sector, with increasing demand for at-home medical devices, particularly in pain management and urology. If the company can capitalize on this trend and continue to deliver effective, non-invasive treatments, there's significant growth potential. However, small-cap stocks like this can be highly speculative, and today's dramatic price action is a reminder of the risks involved. It's important for investors to manage expectations and stay alert for any news or updates that could clarify the reason for today's price surge. If NanoVibronix can maintain momentum or deliver further positive news, it could continue to rise. But, as always, the risk remains high in the short term. Our review on FATN. FatPipe Incorporated is carving out a strong presence in the SD-WAN, software-defined wide area network, space, offering secure, application-aware solutions that help businesses manage and optimize their networks. Their suite of products includes SD-WAN, Secure Access Service Edge, SASE, and Network Monitoring Service, NMS, solutions, all designed to help companies improve security and performance across cloud, hybrid cloud, and on-premises environments. FatPipe's SD-WAN offering integrates network traffic management, routing, security, and monitoring, making it a key player in ensuring businesses can securely and efficiently manage their mission-critical applications. Today, FatPipe stock saw a huge 126% spike, with 6.39 million shares traded. The stock surged by 155% at market open, followed by 2 more breakouts of over 30%. This kind of massive price movement typically signals major investor excitement or news, and multiple trading halts throughout the day suggest just how volatile things were. While it's not immediately clear what's behind this rally, it could be tied to new developments such as product announcements, partnerships, or a significant market event that's fueling investor optimism. With such a sharp jump, it's important for investors to be cautious. FatPipe is a smaller company in a competitive market, and while its products are strong, big surges like this can lead to significant pullbacks once the initial excitement wears off. The fact that the stock was trading in extreme volatility with multiple breakouts suggests a lot of speculation is involved, and that could lead to unpredictable moves in the near future. That said, FatPipe is operating in a growing space with increasing demand for secure, cloud-based networking solutions. If the company continues to deliver on its offerings and capture market share, it could see significant growth. But with today's dramatic price action, it's wise to keep an eye on any news or updates from the company that might explain the surge. Investors should be prepared for more volatility in the short term and understand that while there's potential, the risk remains high with these kinds of price movements. Our review on ZVSA. ZyVersa Therapeutics Incorporated has seen a notable surge in its stock price today, up 118% with a whopping 113 million shares traded. This spike comes in response to CEO Stephen Glover's recent shareholder letter, where he outlined key advancements in the company's efforts to develop treatments for chronic kidney diseases, specifically focal segmental glomerulosclerosis, FSS, a rare and debilitating kidney disorder that often leads to kidney failure. The company's lead drug, cholesterol efflux mediator VAR200, is at the forefront of these efforts, and Glover's letter brought exciting news about upcoming clinical trials and regulatory advancements. ZyVersa is preparing to launch a Phase 2A proof-of-concept trial for VAR200 in patients with diabetic kidney disease, DKD, in the first half of 2025. This trial aims to gather early renal data that will inform larger trials for FSGS, the company's lead indication. The DKD study will also provide valuable insights into the optimal design for future FSGS trials, helping ZyVersa better navigate this challenging disease area. With no approved drug therapies currently available to delay or prevent FSGS progression, the need for effective treatments is urgent. Adding to the excitement, Glover highlighted the recent recommendations from the Parasol Initiative, which could significantly accelerate the development of FSGS drugs. The initiative has proposed using proteinuria, a marker of kidney damage, as a surrogate endpoint for regulatory approval, reducing the need for long, expensive trials that track kidney failure progression. This breakthrough could help VAR200 and other FSGS drugs reach the market faster, creating a much-needed treatment option for the estimated 40,000 FSGS patients in the U.S. alone. The excitement around ZyVersa is further fueled by the growing market for kidney disease treatments, which reached $18 billion in 2024 and is projected to hit $30 billion by 2034. If VAR200 is successful, it could be positioned as an add-on therapy alongside existing drugs like Filspari, offering a unique treatment pathway targeting cholesterol and lipid accumulation in the kidneys, which contributes to FSGS and other kidney diseases. While today's price jump shows investor optimism, biotech stocks are notoriously volatile, especially when a company is still in the clinical trial phase. ZyVersa's prospects are closely tied to the outcomes of its trials, which will shape its future trajectory. If the company can successfully demonstrate the efficacy of VAR200 in its upcoming trials and navigate the evolving regulatory landscape, it could capture a substantial share of the kidney disease market. However, as always with early-stage biotech, investors should remain cautious of the inherent risks involved. If things go well, ZyVersa could see substantial growth, but setbacks along the way are a real possibility. Please subscribe, give the video a like, and watch more from our playlist. Thanks.